Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about how central banks will essentially just be creating their own digital currencies in the future and how that affects the global monetary management system. So we are in fact looking at basically a new Bretton Woods agreement. This is probably one of the most important videos that I'll ever make on this channel, but I guarantee you that the algorithm will not be friendly to it and it will not share it. So I'm asking you as my audience or as my viewers, if you could please share the video if you got value from it, I would greatly appreciate it. So I'm going to highlight a Twitter thread by a gentleman by the name of Powell, who's basically going to give a summary of what's going to be happening with these digital currencies and how they're going to be implemented over the next few years. So if you weren't paying attention, on October 15th, the managing director of the IMF, Kristalina Georgieva, she basically came out with an announcement talking about a new Bretton Woods moment. So for those of you that aren't familiar, Bretton Woods was essentially just a global monetary management system that was implemented after World War II. It happened in 1944, which I talked about in a few other one of my videos. So let's highlight this thread here. And I advise you, if there's anything going on in the background, please watch this where you can just focus on the video because this is very important, okay? So let's get right into it. So Paul said, if you don't think central bank digital currencies are coming, you are missing the big and important picture. This is going to be the biggest overhaul of the global financial system since Bretton Woods. And just so you know, this was tweeted yesterday morning. At the time of this recording is basically the morning of October 19th. These tweets were about 24 hours ago. So speaking of Bretton Woods, this IMF article alludes to a huge change coming, but lacks real clarity outside of allowing much more fiscal stimulus via monetary mechanisms. And tomorrow, which is today at the time of this recording, the IMF holds a conference on digital currencies and cross-border payment systems. But it's not just the IMF. This was first floated by Mark Carney at the Bank of England over a year ago and set the course for a new system. His big idea is a move away from the dollar, using central bank digital currencies so its effects on world trade, flows, and debts was not so pronounced. The European Central Bank weighed in many times in the last year, but the latest is clear. Central bank digital currencies are coming and soon. Next up was the regulatory changes in the United States allowing for bank custody of digital assets, especially Bitcoin. For example, the acceptance that digital assets are not going away and in fact are the future. And recently, the Cleveland Fed added their thoughts. So I know a lot of people that work at the Cleveland Fed. I'm from Cleveland. This was actually a speech given by Loretta Mester, which happened September 23rd, 2020. And I will be making a separate video highlighting this. So let's get back to this thread. On Monday, which is today, Jay Powell gives his input on central bank digital currencies at the IMF talk listed above. Central bank digital currencies are coming and they will change everything. They are coming under the stealth of cross-border payments, but it means so much more. So if you look at this poll by the IMF, which was held about 24 hours ago, you can see that in 5 years, how will you be sending money to a family member abroad? Is it cash in an envelope? Is it money transfer? Is it with a digital currency or other? And you can see basically 72 out of 100 people answered with a digital currency, and there were 2,800 votes on this poll. So with that being said, they allow the central banks to circumvent the banking and fiscal system and give or take money with tax or transfer payments directly. That completely changes monetary versus fiscal policy forever. Central banks will now be able to manage fiscal policy outside of government balance sheets. They can give, for example, restaurant owners direct payments for stimulus while at the same time charging negative interest rates on larger savers. Again, alluding to all my videos with savers are losers. They can create direct tax payments too in the rails of the payment system. No more IRS is what he poses. So basically, multi-interest rates set centrally will be the norm. No one needs to allow the banks to set interest rates based on capital availability or risks. Central banks can now create a defined cost of capital to whoever they please, and if they get the powers by the governments, which will come. I mean, we've already seen it in the United States, in Japan, in Europe, pretty much all over the world. So don't forget, it absolves any spending responsibility in a crisis from governments, and after 2008 and 2020, they are desperate for it. Again, going back to payments and the pandemic. So it will also push behavioral economics to the forefront based on big data and real-time activity data. Central banks can now create incentives directly as rewards or punishments. They can affect human behavior in a way that is much less blunt than traditional monetary and fiscal policy. There are enormous downsides and there are enormous upsides to all of this. Many will say it's taking even more freedoms away, and in some ways it is. It also gives those disadvantaged by lack of available capital a better chance, a key problem, especially in 2020. Right now, it has to be via debt at punitive rates, but this all changes all of that. Poor can get direct transfer payments with the debt in the central bank balance sheet. It's the key step towards universal basic income, which too is good and bad. So for those of you that are fans of, Andrew Yang, you know what UBI is and what is proposed in that. So he's just saying that this is another form of UBI. So, and the reality is we don't have any freedoms from governments or central banks if we operate in the main system. And the big tech firms already have perfective behavioral economics as a way of changing human behavior. But the key part of here, outside of a totally revolutionary way to collect taxes, gives incentives and overhaul the entire system, is an implicit agreement at the IMF level that central banks can run unlimited balance sheets if they combine forces. They move eventually, in basically 3 to 5 years, away from the dollar towards a basket of currencies, the Libra idea, which was the light bulb moment. Then they can all agree to increase balance sheets together to avoid single countries getting penalized via foreign exchange. Again, there will be huge benefits to the new system, but it can only mean a further debasement of the entire fiat currency system. That's basically what all global economies run on now, is fiat currency, and there's nothing backing these currencies. That's what fiat means. So can it create structural inflation? I don't know. I'm sure the debate will be huge, but I doubt it due to secular pressures. But fiat globally will be worth less versus hard assets. So he's talking about, real estate, precious metals, potentially even Bitcoin, things like that. And that means that gold, and in particular Bitcoin, will become the way to circumvent the system of even lower value. It also creates incentive systems for other nations to opt into a hard currency system to attract capital, and this paves the way for global regulatory arbitrage. Yes, there is a chance that central banks will try to suppress Bitcoin in the further future, but much like suppressing gold, it is highly unlikely to work due to the incentive of value of owning it. In the end, we have lived with gold as an opt-out for millennia, and we will live with Bitcoin too. I'm not concerned, and it's a story for another day. Right now, the positive impact on Bitcoin and gold is extraordinary. Regulation globally is opening up to acceptance. This is bad news for the banks who are about to be attacked by central banks, fintech, and crypto. They are losing their role in the financial system over time. Short the banks, long Bitcoin, as Anthony Pompliano likes to say, and he is dead right. The wall of money is coming. Bitcoin is protection as a pristine reserve asset. Bitcoin is freedom, blah, 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 blah. Okay, so that's his spiel. Everyone knows that him and Pomp are big Bitcoin fans. So what are my thoughts? I used to work at a publicly traded bank. I used to work at another publicly traded commercial real estate development company in their capital markets sector, meaning I did commercial loans, analysis, all that stuff. So what I do agree at the end is that things like central bank digital currencies, cryptocurrencies in general, negative rates, they're basically destroying the business model of banks. Banks make money when they loan money. They get their money from the Fed at the Fed funds rate, let's say at 1% for easy numbers, and they create a home mortgage for 3%, thus making the arbitrage of 2%. That's how banks make money. So how are banks supposed to make money when rates are negative or extremely low, which they can only go lower further, alluding to his negative interest rate policy comment. So with all this being said, I know this was probably a boring video unless you're really interested in this stuff, but this really is going to shape the future of global monetary management, and this may be the spark of something really big. If you're interested in Bitcoin, I buy all my Bitcoin from Coinbase. You can sign up in the link below. You get $10 when you buy 100. That's not the point of this video. I actually put my money where my mouth is, and that's where I invest in Bitcoin. This video probably will not resonate with 95% of my audience, but I make videos like this because I feel like it's my fiduciary obligation to my audience to inform you about big news such as this. So that's just one person's opinion, but the news is real. You can go to the IMF's website and confirm all this stuff, and I'm interested to see what's going to happen over the next 3 to 5 years. So as always, I hope you got value out of the video. If so, share the video with one friend. Just click the like button. Don't smash it. Don't destroy it. Don't annihilate it. Just simply tap it. And I hope you guys got value out of this video. Thank you so much and have a prosperous day. I'm stacking my Satoshis. I'm stacking my Satoshis.